I'm Darius McDermott, Managing Director of Chelsea Financial Services. Today I'm with Jason Pidcock, Fund Manager of the Jupiter Asian Income Fund. Thank you for taking the time, Jason. You've been investing in Asia for sort of some 25 years now. How has income investing changed in Asia over that period?
It has developed since the mid-1990s. We've got a lot more companies that have higher payout ratios, companies that are committed to paying dividends, have formal dividend policies. I'd say since 2001, the average payout ratio in the region has been fairly steady, but we do have a greater choice. So it's much easier to put together an income-paying portfolio than it once was.
Yeah, there's a couple of issues in the region at the moment. Primarily, I think the China-US trade wars. What's your take on that? What's your observations?
We haven't made any adjustments to the portfolio since the trade wars kicked off. We were already underweight China, and we don't have any Chinese companies that export to the US. Now, clearly, a lower growth rate in China affects the whole region, but on the other hand, you tend to get lower interest rates, lower bond yields. Generally, we feel that the current market conditions suit us. So the news topics that people are most worried about don't really affect us in a negative way, but because of that dampening effect on bond yields, that ought to be positive. So generally we feel that the portfolio is reasonably defensive, more localized in terms of revenues, and so we're not too worried about the global trade picture.
And another area which you have a decent portion of the portfolio in is Hong Kong. And again, that's been very newsworthy, not for the right reasons, but for the sort of the protests and the demonstrations. How has that impacted, or is again that just a bit too short-termism to worry about?
So we have two companies that derive most of their earnings from Hong Kong, but we have a number of companies that are listed in Hong Kong that derive earnings from elsewhere. So China, but also Macau, one of our largest listed stocks, sans China. Yeah. All of its earnings are derived from Macau, and Macau hasn't been hit in the same way as Hong Kong has. Certainly no demonstrations and fewer declines, or less declines in visitation. For Hong Kong itself, yes, it is a negative. We are watching it closely. It could get worse. We haven't made any changes to the portfolio yet. The two stocks we have we think of as Hong Kong companies look much cheaper, but they both have strong balance sheets. Hong Kong has suffered setbacks in the past and has always rebounded from it.
Good to have that balance sheet support, though, in difficult times.
Is. Yes, that is key, that we're investing in what we see are survivors, companies that are well managed, that have flexibility. And for the moment, we're looking through this.
I also noticed that you've got sort of just upwards of 20% in technology sector, not a traditional income-paying sector. What's your exposure like in the region, and is there a couple of interesting names that we might talk about?
We like the tech sector. This is something that Asia is very good at, and tech companies in Asia tend to have very strong balance sheets. So we have 5 tech companies. All of them are in a net cash position, and they make up 5 of our 8 companies in a net cash position of our 30 stock portfolio. We have 4 hardware companies, 3 of which are in Taiwan and 1 in South Korea, and 1 software company, let's say. So the software is Tencent, one of China's leading internet companies, which is an entertainment-focused business. We have Samsung Electronics in South Korea, which has been leading the way in terms of raising dividends and really leading the way for Korean corporates generally. And in Taiwan, we have TSMC, MediaTek, and Hon Hai. TSMC is a long-term core holding. Many other fund managers own it as well, so we're not doing anything differently there, but it is a great company.
Cash generative.
Cash generative, decent dividend yield, net cash position, and a global leader at what it does. MediaTek has been a standout performer year to date. They're a semiconductor designer. They're leading the way in 5G chip design, and they have taken on a lot more new customers recently. They do particularly well with Chinese smartphone manufacturers, but the area of growth of their business is multiple in nature, so we're quite excited about MediaTek, and it has been receiving a lot of upgrades recently. Then we have Hon Hai, which is the world's largest contract manufacturer. Now, their advantage is they have a global footprint, so they can more easily move manufacturing away from China to other countries like India and Vietnam, though of course it can't happen overnight.
No. And finally, an interesting name that appears in the top 10, Embassy Office Park REITs. What exactly is that, and what's attractive about that?
Embassy's brought more smiles to my face this year than any other stock. I've been so happy with this. This was a company that IPO'd earlier this year, so the deal was going through in March. We could see immediately that it was exactly what we needed from an Indian holding, and we previously didn't have anything in India. Yeah. We were anchor investors in the deal, so we got a reasonably good allocation. The IPO price was 300 rupees. Today it's trading at 409, and we've had a dividend already. So this is an owner of Grade A office property in 4 key cities in India. So they tend to manage business parks that are full of offices, which they rent out to multinational companies and blue chip local companies. So they have a very high occupancy level, great tenants. Their current rents are below market, so we're confident over the next 3 years they will deliver earnings growth as they are able to increase their rents. They have a strong balance sheet and a decent dividend yield, which is higher than the 10-year government bond yield of India. It's a reasonable sized company. The market cap's just over $4 billion US. So we haven't been surprised at how well the share price has done, because we thought at the IPO it was very generously priced.
Thank you, Jason. For more information on the Jupiter Asian Income Fund, please visit chelseafs.co.uk.